My name is Keith Martin, and I am Co-Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFII. On behalf of myself and my Co-Executive Director colleague, Brendan Wicks, thank you for joining our webinar today. The Canadian Association of Financial Institutions in Insurance, CAFII, is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 13 members include the insurance arms of Canada's major banks and credit unions, along with their insurer business partners, which underwrite credit protection insurance and travel insurance. We are pleased to have a panel of senior representatives from Deloitte Canada that will be sharing their insights with us today. Please join me in welcoming Joe Solly, Partner, Risk Advisory, Sustainability and Climate Change, Carolyn Murnahan, Senior Manager, Risk Advisory, Insurance, and Harry Lee, Manager, Audit and Assurance, Actuarial, all from Deloitte Canada. Today's session will be recorded and posted on our CAFII website in the near future. If you have any questions that you would like to pose to our presenters during the webinar, please send them to me as the host of this webinar using the Q&A function of Zoom, and I will pose them on your behalf. Unless you specifically request in your question to be identified as its source, I will pose all questions to our panelists on an anonymous basis. Before we get the webinar underway, I want to extend a special welcome to a number of VIP guest attendees. In addition to many representatives from our CAFII member companies, we have attendees today from allied industry associations, such as the Canadian Life and Health Insurance Association, or CLHIA, and the Travel Health Insurance Association, THIA, and from insurance and financial services regulators and policymakers across Canada, including the British Columbia Financial Services Authority, the BC Ministry of Finance, Alberta Treasury Board and Finance, the Financial Services Regulatory Authority of Ontario, the Ontario Ministry of Finance, the Office of Nova Scotia's Superintendent of Insurance, from the Canadian Council of Insurance Regulators and Canadian Insurance Service Regulatory Organizations Secretariats, and federally from the Financial Consumer Agency of Canada and the Office of the Superintendent of Financial Institutions. As well, we have a representative in attendance from the Ombuds Service for Life and Health Insurance, OLI, a very important player in our sector of the insurance industry. Welcome to you all. I am now pleased to turn the floor over to Joe Solly, Partner at Deloitte.
Excellent. Thank you very much, and very pleased to be here today. We've assembled our core practitioners in the area of climate and serving our financial services sector. I've been with the firm for approximately 22 years, working entirely in the area of climate change and specializing in financial services. So the agenda we have here for you today is we'll talk, after introductions, we'll talk about climate change and life insurance. Contextually, we'll get into a modeling, some hypothesis and a case study, as well as a risk mitigation case study, and then we'll wrap it up with a connection with COVID in very topical sense, and then have some Q&A. So looking forward to be here today. Carolyn, did you want to say hello, and then maybe over to Harry as well?
Yes. Hi, my name is Carolyn Murnahan. I'm very excited to be here with you all today to speak about a topic that's very close to my heart around climate change and the insurance sector. Over to you, Harry.
Thanks, Caroline. Again, very happy to be here as well. So I'm a manager from Deloitte Actuarial, but also I'm part of the CIA climate change subcommittees. Glad to be here. Thank you.
Excellent. Okay, so for the first part here, we'll talk a bit about climate change and contextualize it for life and health, and myself and Carolyn will lead us through this. When we look through at some of the most important global reports of the world, there's many of them. World Economic Forum is one we always like to follow, and you can see on this slide that climate has continued to evolve over the years, certainly environmental factors. If you just look at the green and the progression over the years to the right, and now climate being within the top 5 global risks in terms of likelihood, whether it's extreme weather, climate action failure, which we are not addressing it effectively, natural disasters, biodiversity loss, and even human-made environmental disasters. So high likelihood if we look across the top risks. And then when we think of impact, it scores within the top 3 of the top 5 impacts in terms of climate action failure, biodiversity loss, and extreme weather. So the WEF has really been increasing their reporting on this over the years, and it's getting heightened focus. On the left side, you can just see how they're plotted amongst many other risks in the world, and the 2 top ones being climate action failure and extreme weather. What's really interesting is when you look to the right, the WEF has now come out and has reported on the interconnected nature of climate with all the other risks out there. So just to note a few, you can see natural disasters or food crisis or water crisis. Or even involuntary migration. There's now, we're using the term, climate refugee in some places where people are literally leaving because they can no longer live in an area due to climate stresses. And also sort of global governance failure, and good climate management only comes with good governance and fiduciary duties and responsibilities. So it's really being linked now to many other aspects of global risks. When we think of climate, we like to describe it in a few lenses, and the first one would be physical risks. So this is dealing with changing weather and other climatic events, whether it's wildfires, extreme heat, or extreme cold. It could be floods or even coastal storms. So anything that's being impacted from a physical nature. When we think of transition risks, it's all about, as we move towards a low carbon economy and how fast we will get there. By all remarks and scientific evidence, we need to be carbon neutral by 2050, or else we will experience significant, even more catastrophic risks, and will be beyond a point of return, according to global scientists. So when we transition, there will be winners and losers across different markets and industry. So it's important to think through those in different scenarios. When we think of liability risk, that's the risk that could come when organizations or individuals suffer from the impacts of climate and experience loss or damages of various sorts and need financial coverage, or could potentially turn into various lawsuits and legal actions. And in many cases, we're seeing that out there. Exxon was an interesting one where it went all the way to the courts. It didn't go through, but the interesting fact is it went all the way through to a full trial. Which was quite a paramount experience, really. When we look at Canada, it's interesting geography, and the latest science has indicated that Canada is warming at twice the rate globally, according to other jurisdictions, in a report released in 2019. What also came out in that report is sort of the 12 major areas of climate risk facing Canada. And the top 6 of them are which ones we could experience significant losses over the next 20 years. And right there at the top, you see human health and wellness, which is certainly an interesting one for this audience today to pay attention towards. On the left, it just shows some other examples in the country. Maybe on the bottom right, I'll just draw attention to, increasing temperatures and how that can affect human health due to heat stresses and other potential vector-borne diseases. If we have, more ticks in the environment, and we expose ourselves to Lyme disease or other diseases such as West Nile or even malaria, we can expect to see some changing risk profiles over the time as Canada experiences various climate change events. When we look at it from a regulatory perspective, it's the Bank of Canada has been very vocal over the last year or two, and you can see a series of timelines here. I won't read them all, but the key message on this slide is that there is a call to action, and the Bank of Canada has identified climate as one of 6 vulnerabilities that will impact the financial stability for the first time ever. There's a call to action. There's a need for increasing supervisory capabilities in these institutions. There's a need for more scenario analysis and credit stress testing across the system, or stress testing of a portfolio. So it was nice to see recently that Tiff Macklin was appointed as a governor of Bank of Canada, certainly a very well-regarded individual and very active in the expert panel on sustainable finance, and very much a proponent of the need for climate risk. So great move, frankly. We're also seeing OSFI being quite vocal out this in some of their recent reports, saying similar things that the Bank of Canada has put out. So, a need for increased focus on this. We need to get more strategic in their approach, keeping an eye on progress, both of companies and their climate strategies and the race to decarbonization, as well as other global regulatory markets and what other regulatory bodies are doing. The need to monitor this progress very surgically to ensure that we take appropriate action in Canada and with the right supervisory capabilities. So very much OSFI is all over it as well right now. When we look globally from climate stress tests across financial institutions, in the UK, the PRA was quite active, coming out with a regulation last October requiring that financial institutions disclose their climate strategies and think through credit stress testing activities. The Bank of France as well, there's banks over there doing active climate credit stress testing on portfolios. We've seen it at banks in Australia as well. And insurance organizations have set up major research arms. Certainly we know of the Intact Center for Climate Research. Blair Feltmate is doing lots of research over in that organization. Also just globally looking at the Monetary Authority of Singapore and working on incorporating a broad range of climate-related risks into stress testing scenarios and how it might impact the various financial institutions. On the right here, we're just highlighting the fact with the COVID disruption that sort of the stress testing and some of the climate immediate efforts have slowed down a little bit, and the PRA has announced that it will delay the launch of its scenario work and sort of requirements, but it won't be long before they'll bring it back on. And certainly climate is something that will be here for the long term. COVID, we're experiencing what we are, and hopefully it will diminish over time. But climate seems to be the longer term play, perhaps. So I think we're going to see a lot of regulations come soon. I'll pass it to Carolyn now to bring some more insurance angle for us.
Great. Thank you, Joe. We wanted to take a few minutes to just reflect on what this reality of climate change potentially means in the insurance sector. So we just wanted to reflect on both some of the challenges as well as some of the opportunities that it brings to the sector. So first of all, looking at the liability side, one of the key challenges that there is in relation to the inclusion of climate risk is what we do about risk pricing. And we'll be speaking about that in a little bit more depth when we get into some details on modeling hypotheses and what this potentially means for risk mitigation. We also know that there's a lot of public policy work to be done around insurability and the availability of insurance going forward. And we also know that there's potentially a lack of awareness, both across the general population and specifically within the life and health sector, on the potential impacts of climate change on life and health risks, as well as what the potential mitigating strategies might be. We're also finding that there's the general disconnect between knowledge of climate change risks and the application of that in kind of day-to-day usage. We also know that on the asset side, there is the kind of looming low carbon transition challenge. And when we look into this, there's quite a lot of interest in developing some asset classifications that will be appropriate going forward. We know that there's challenges around carbon pricing and other tools for understanding pricing signals around climate change. But we also know that there's a kind of need for and growing demand in the area around green investment opportunities. We aren't going to spend very much time in today's session speaking about the asset side. We just wanted to raise it to this audience for awareness. When we then look on the opportunity side, we recognize on the liability side that there is the potential for the creation of new products and services to be offered by life and health insurers. Life and health insurers have a really unique position with the clients that they support in the ways that they support them, and this potentially offers new ways and new product options available to the clients of life and health insurers. We also want to bring to this forum that this may be the opportunity to begin thinking about, are there pieces of data that could be being captured now to improve future pricing, future underwriting, and then on the asset side, which we're ignoring for today, potentially in relation to investment decisions. We also wanted to capture that on the asset side, there is really an appetite for the piece around green investment and looking at climate resilience and decarbonization of the economy as something which insurers can support and develop as we go forward. The next item that we wanted to pick up on is the direct and indirect paths in which climate impacts may face the insurance sector. So some of the climate change topics which you'll be familiar with relate to increased precipitation, increased heat, increased cold, increased flooding, wildfires, storms, and those potentially move through the social infrastructure as direct exposure. So there may potentially be direct exposure to life as a result of flood and heat stress. So that's potentially people dying as a result of those, or potentially resulting in a lifelong morbidity as a result of that. There are also indirect exposures. And one of the key areas in this relates to vector-borne disease, as well as water and air pollution. So these would potentially result in long-term changes in health, so impacting on the morbidity side. We also have the potential for economic and social disruption, and this is where we begin to look at nutrition as well as mental health. And we then wanted to kind of tie this back to the overall health impacts that we're speaking about here. So this is considerations around undernutrition, potential death due directly to climate hazards, heart disease, lung disease, and other vector-borne diseases, as Joe has already alluded to, around Lyme disease, West Nile, and other vector-borne illnesses. We then just wanted to bring in the global perspective for the Intergovernmental Panel on Climate Change. And this is beginning to bring together some of the activities that we're seeing as a result of climate change and what impacts those potentially have in the life and health sector. So in this, as we begin to see increases in atmospheric temperature, we are aware that this has the potential to lead to increased morbidity and mortality due to heat-related illness. So that may be kind of short-term heat-related illness, such as heat stroke. It could potentially be longer-term conditions such as acute cardiovascular disease and renal disease, and there is also potential for death. In addition, another area where there is significant impact is reduced air quality. This has the potential to result in or impact on asthma sufferers, as well as, resulting in significant lower respiratory infection, upper respiratory infection, and can potentially lead to certain types of cancers. We also have extreme weather events which have the potential to impact on food security, housing, and general infrastructure, which has both potential physical consequences as well as mental consequences for the individuals impacted. And we also have a topic that we've raised a couple of times around the expanded geography for certain vector-borne diseases that relate to insects being able to migrate into new areas. So some of the examples of this are in 2017, the 712 extreme weather events resulted in huge economic losses, which totaled around 326 billion. And these consequences are kind of just in 1 year. We also have become aware that 157 more people, or million more people, have been exposed to heat waves in 2017 versus 2000. And we've lost 3.4 billion weeks of work as a result of this. So we're seeing significant impacts due to climate change. We're also aware that there's the potential for decrease in agricultural yield, and that means that the same amount of soil doesn't produce the same amount of nutritional value, which has the potential to have significant long-term health consequences in the geographies it impacts. So those are some of the overall items that we wanted to pick up on, and we wanted to highlight some of the lessons that were learned from the Australia wildfires earlier this year. So the two key learnings that came out of it was that the ambient air pollution as a result of wildfire resulted in a significant impact across the population of individuals who were living in areas that were impacted by the smoke from the bushfires. And there was also some new research that really showed some of the mental health consequences as a result of the bushfires, and they extrapolated that to potentially being in relation to natural or man-made disasters around anxiety, depression, potentially PTSD, and other substance abuse. So this is really kind of bringing home some of the potential direct and indirect impacts of climate change. So we wanted to take a little bit of time to reflect on what insurers could potentially do at this stage to start bringing some of these conversations into their organization. So we're going to jump in. So one of the first things that can be done is to kind of create the space for conversations on climate risk to take place. So that may include introducing a clear governance structure, having a place where different functions of the organization can come together to talk about this, and also enable this to be part of decision-making that's taken on long-term strategies, such as on products, underwriting, and distribution. We would also suggest beginning to think about how climate risks might be integrated into more advanced analytics. So this may include reaching out to different research bodies, getting involved in what they're doing, beginning to look at your current modeling assumptions with that critical eye to how these things might change. Beginning to use visualization tools to enable different audiences to engage with this conversation, as well as potentially considering working with insurtechs to look at what might happen across the portfolio. Another opportunity may be to take a kind of enterprise-wide view of how climate risks can be managed, as well as working with a kind of cross-functional team to support the disclosures that are coming through initiatives such as TCFD. As part of this, it's very important that a wide range of stakeholders are brought together so that there can be kind of that commitment and a broad set of perspectives brought together in order to make it real for the organization. In addition, it's also, or one of the topics that we're also seeing beginning to come forward is looking to corporations to become involved in supporting their insureds to really alleviate any climate risk. So where we look at life and health, this may be giving individuals a better understanding of how their health may be impacted by heat, giving people a different understanding of how they might be able to change their behaviors or adapt themselves in order to potentially reduce the impact that climate change related risks could have on them. So with this in mind, I'm going to hand over to Harry to speak about some of the hypotheses that have been developed in relation to adjustments to mortality and morbidity modeling.
Okay, thanks, Caroline. So now I'm going to take you through some of the modeling hypotheses related to life and health insurance. So I understand that the climate change impact to life expectancy may not seem as apparent as to the property casualty insurance because the impact is not something that we can see or feel right away. However, if we start to take a much longer term view, perhaps the relationship will become much clearer between the climate and mortality and morbidity. So the hypotheses listed on this slide are by no means an exhaustive list. However, those are the ones that are being discussed by the broader actuarial communities, both in Canada and internationally. And I have categorized them into 4 groups. First, the temperature. A 2015 study published by Lancet, which covers over 300 locations and studied 74 million deaths over the 30 years period, suggests that out of all the temperature-related deaths, extreme colds are responsible for more deaths than extreme heat. So as a result, the rising temperature impact to life expectancy might not be as severe as previously expected. Then you may ask about what about the extreme heat waves that hit Europe in 2018 and also alluded by Caroline earlier. So this relates to the next hypothesis, which is when assessing temperature-related mortality morbidity, how much do we separate the deaths resulted from the extreme heat fluctuation versus the gradual temperature increase? And it is important to distinguish the two, as later on when I discuss the climate scenarios, you will see the scenarios are more focused on the gradual increase of temperature rather than temperature anomalies. Precipitation may be the easier concept to grasp, as both drought and excessive precipitation can have a direct impact to life expectancy of the affected regions. And currently over 800 million people are lack of access to clean water, and high temperature and more extreme weathers will certainly make matters worse and then cause high mortality rates. Excessive precipitation, we all know the damage they can cause to the properties, but it can also cause damage to agriculture, water supplies, energy, and the ecosystems. And those have a knock-on impact on the mortality and morbidity. Take agriculture, for example. Excessive precipitation will likely reduce the crops output by soil erosions, increasing spread of weeds and pests, which has been alluded by Caroline earlier. And this will likely expose additional population to the risk of starvation and malnutrition. Climate effects such a broader spectrum, some will likely have a secondary effect on life expectancy. A 2018 World Bank Group report estimates that the impact of climate change could result more than 140 million migrants before 2050, as Joel mentioned earlier, as the climate refugees. So the migration of this scale could easily lead to the massive strain on local economy and social and can cause social unrest, not mention the potential for local conflicts. And insect and other diseases are another example. The locust crisis that hit East Africa earlier this year was the worst in 70 years. And because of this, over 20 million people are currently facing food insecurity in East Africa. And like Caroline alluded to earlier, the vector-borne diseases such as Lyme disease, malaria, Zika virus, and West Nile virus can also benefit from the change in temperature, precipitation, and humidity. And also human migration can further worsen the disease spread by spreading pathogens into the new areas. So far, I've talked about the climate change impact on vulnerable populations in certain regions. But that is not to say developed countries are immune from climate change. In developed countries, the impact of climate change to life expectancy might be different to insured populations versus uninsured populations for various reasons, such as physical locations, ability to access healthcare. And as I mentioned before, the effect will likely be felt over a long term rather than immediate future. However, it is never too early for the insurers to start looking at their existing pricing and reserving assumption to see if it's adequate, and also to think about what it means to the long-term sustainability of those programs. And if we take a macroeconomic view, some economists predict that the global economy will shrink by 3% by 2050 in a do-nothing scenario. And the GDP drag of the climate change may mean less investment into healthcare. And some may argue that this will have the most impact to the mortality morbidity than anything else. To conclude this slide, so these are some of the key modeling hypotheses on climate-induced risk to life expectancy. And because we're talking about life insurance, which is a long-term business, there are still a lot of uncertainties, even for some of which we have good empirical data. And any quantitative analysis related to the above mentioned hypotheses are still being assessed and in the early developing stage. So next slide, please. Thank you. So in the next few slides, I will talk about climate scenarios. So as mentioned previously, there are a lot of uncertainties when making predictions about life insurance. To cope with climate uncertainties, scenario analysis is a very effective tool as they enable insurers to narrow down the possible outcomes and help insurers develop mitigation and contingency plans. And here I have listed a few reference scenarios that have developed by various organizations and associations. In selecting those reference scenarios, companies should consider, one, is it based on the most recent knowledge? As we all know, climate science continuously evolves as we're collecting more and more data over time. Second, what is the political and economic viability of the scenarios? Does this scenario take into account the current and future political and economic policies? And are they viable in today and in future? Thirdly, the transparency on the external data and hypotheses. Are the scenarios robust enough to adjust the changing data and hypotheses in future if necessary? And last but not least, is the scenario comparable to the existing approach? Can company create a set of narratives and make meaningful comparison with the existing approach? If you can turn to the next slide, please. Thank you. So this slide illustrates the general mechanism of the climate scenarios, in the process of which both quantitative and qualitative data were used by the integrated assessment model. So the integrated assessment model are not like the traditional models that we're familiar with. They're designed to combine different strands of knowledge and discipline to try to understand how human development and societal choices affect the overall climate. And the results from the integrated assessment model are what we call SSP, which stands for Shared Social Economic Pathways, which, as the name suggests, a pathway in the world might take in the next century, and it is measured by the global temperature increase. It is called pathway because the emphasis here is not only on the final outcome, but also the projection to arrive to that outcome. And as I mentioned, those pathways were modeled out to consider various factors such as population, economic growth, education, and technology advancement. And each pathway described an alternative baseline for the future society. And as you can see on the slide, depending on how things plays out, the model can produce a wide range of temperature increases. And we have attached a slide in the appendix which describes the details of what goes into each pathway. But I think even with the most optimistic pathway, a 3 and 3.5 degree increase in global temperature will likely have a long-term impact to mortality and morbidity. So with that, I will turn back to Caroline for risk mitigations.
Thank you, Harry. So we wanted to just take a few minutes to speak about risk mitigation, and risk mitigation from two perspectives. Risk mitigation first from the perspective of the protection provided by insurance, and second looking at the risk mitigation available to insurers. So we wanted to first speak about some of the ways in which there will be potential to think about climate change as a part of actuarial work. So one of the key themes that has already come out in this session is that there are uncertainties around future trends, in particular in relation to morbidity and mortality. And this is something that offers the opportunity to begin to think about it as a part of capital management, product pricing, potentially reinsurance strategies, to really just open the conversation in the organization to bring this type of thinking and potential forward-looking view. We are also aware that there are a number of changes happening in the insurance regulatory environment, which Joe walked us through at the beginning of the session. And this is an opportunity to really think about what the potential future disclosures might look like and what risk reporting might be done externally. We're also aware that there's quite a lot of uncertainty around when climate change is going to, start to become something that government is acting on. So the speed of responses and the magnitude of responses to potential climate change risk is really an unknown at this stage. And this is something where potentially it could be included as a part of the ORSA as something to think about, an idea to bring into potentially a scenario or something of that ilk. As well, we have the thinking around the changes to economic growth and the wider economy and what potentially will change there. And what does that then mean for insurance products and insurance pricing? So that's really just a wider consideration to bring. And one of the topics that is quite an important topic for life insurers when they have quite long-term liabilities is investment underperformance. So if that is a key part of your business, this is a topic to have, a regular and open dialogue on, just to make sure that there's that view in terms of whether climate change risks will in fact have an impact in the near, medium, or long term within the business. So the next topic that we wanted to just bring up as a part of this is that there are likely to be some key changes for consumers as a result of changes to the underlying risks. So it might mean for insurance availability that, if there is a significant change in the exposure in a particular geography or for a particular population, that insurance might potentially become inaccessible to certain customer groups. And this is one of those kind of moral obligation questions that potentially comes out around what do we do about that. There's also around insurance pricing of how do we begin to bring these risks into pricing, on what time frame, how does that impact certain populations? Might this begin to price out certain groups, or would it price in other groups? So these are just kind of open questions that there are. And one of the challenges that we know from the reinsurance sector in the P&C side is that there might be significant changes to reinsurance capacity as well as reinsurance pricing if risk events start to take place, or there's a perception that a certain geography or exposure type might have significant changes in the near future. So this may reduce the availability of risk mitigation techniques that insurers use in terms of buying out or selling out certain components of the book. And there might also be kind of a consideration or a narrowing of which products or leverage reinsurance as a primary risk mitigation tool. So with those thoughts, I'll hand over to Joe to close out the session.
Great. Thanks, Carolyn. And wanted to bring a link here between COVID and climate and, you know, our views, and there's a lot of views out there, is, you know, flattening the curve as early as possible in COVID allowed us to build sort of this adaptive capacity to deal with the issues, so we didn't put an overburden on the healthcare system. And you know, it helps to arguably slow the pace of what the virus was going to do. It allowed us to get certain skills, infrastructure, resources available, shields, ventilators, the like, to sort of, you know, prepare for this adaptation angle. So I would say similarly with climate, we do need to, you know, flatten the emissions curve and lower the emissions curve, according to world scientists. Because, you know, as a climate and as individuals, we interact with, you know, various people, societies, animals, nature, and all of those aspects and interactions have some form of an impact on our health and the risk for infections or diseases. So when we look at some of the root causes of climate change, it helps us think about pandemics, because when we have deforestation and we have a loss of habitat in animals, we have animals running to different areas and into cities and interacting more with humans, which could create the issue for you know, disease transfer, or if there's air pollution concerns from burning of continued fossil fuels and particulate matter. It does affect health impacts, as Carolyn alluded to earlier, and could create, you know, worsening health effects. Certainly with our high reliance on livestock and meat, we have the potential for, you know, more animal to human transmission possibly. So as the world thinks about getting off of meat or transitioning to alternative proteins, you know, some people are calling cow is the new coal. So we're trying to, you know, scientists are saying we should eat less meat. So we think about that as a constant in our society, and other water quality impacts Carolyn had mentioned. So certainly I think there's an intersection between you know, what we're experiencing in COVID, what are some of the root causes of climate, and how it contributes to potentially new and changing or more pandemics out there with as we interact with society and climate stresses and physical hazards of climate change. So something to be aware of, and certainly take into account in some of the modeling in some of the angles that Harry had mentioned. So factors to consider. But nonetheless, you know, climate change is still top of mind for Canadians and our government, and very much proactive on things like carbon pricing. And they have, you know, some of the models there have said that we need a cost of carbon at around $213 a ton by 2030 in order for us to meet our Paris Accord agreement of 1.5 degrees Celsius temperature change control. So, you know, we are trying really hard in Canada from a political perspective, I would say, on some respects. And then certainly with the Bank of Canada and Tiff Macklin, as I had mentioned earlier, for what we'll soon see in the financial community for financial institutions. So quite positive, I would say, but a lot to be aware of. Just quickly on sort of numbers here in our, you know, green recovery from COVID and build back better and smarter to sort of reduce our reliance on fossil and heavy carbon sort of economies. We need to build resilience against systematic risks of climate change for life and health, and I think we heard some of that today. Just some numbers, you know, climate change is the #1 threat to global health, and according to the WHO, and we've had approximately close to 400,000 recorded deaths from COVID, but we're also, when you can contrast that to numbers that we're projecting out there from the World Health Organization as well, we're looking at 5 million approximate additional deaths between 2030 in 2050 due to climatic reasons, and any and all of what we talked about here today. So, you know, we don't have it here, but you've probably seen the cartoon going around where we have a COVID wave, and behind the COVID wave, there's a recession wave, and behind that wave, there's a climate wave. And it's just to underscore the importance of climate over the long term and how we can't ignore it amongst a COVID situation, and we need to remain focused on it with all due regard to our COVID experience as well. So I think that's the last slide, and maybe over to questions now, and thanks so much for your time, but I think we have some healthy time for questions.
All right, thank you very much, Joe. That's much appreciated. I do have a couple of questions that I'd like to ask on behalf of participants. The first is, can you elaborate a bit on what you foresee as a possible eventuality with respect to undernutrition as a health impact of climate change?
Sure. I think undernutrition, I would start by answering it in terms of the Lancet report is producing last year a lot on diets and how diets are changing. You know, we need to have access to a certain amount of fresh fruits and vegetables and steady state and alternative proteins. So things like sustainable agriculture is very important, in land use policies and how we grow food and how we ensure we have quality food, you know, and the cost of food and the affordability of food are all factors that if we don't manage them well, I think we'll have a shortage of all of those affordable quality foods that we need, which could impact health. I would be the first thing I would say. And the Eat Lancet report that came out last year published quite a bit on that in terms of the changing diet. But I don't know, Carolyn or Harry, did you have anything to add?
And there's also some concern around topsoil quality. As we continue to farm on an industrial scale, there is a degradation in the quality of topsoil, and that has the potential to reduce agricultural yields. And that kind of is the underpinning of the points that Joe was pointing to around availability and affordability, if potentially there is that reduction in supply.
All right, thank you. I have another question from the attendees, which is, after the life and health insurance industry players have addressed the lack of awareness issue within their own organizations, do you have any high-level guidance as to what they should do to address the even greater lack of awareness among the general population on this issue?
I'll start. I would say in terms of the awareness, we find companies, a good starting point in your organization is to start with governance. So it's engaging existing governance structures to ensure you have the right climate competencies on the board of directors, CEO, executive management, so they're aware of climate in general, and then how it applies to your business and your customers and your supply chain. Because then once that governance is set, you'll be able to work with this new information and new data sets and new modeling and new hypothesis testing that Harry walked through. So I think governance is education, awareness, and governance is a great starting point. And then in terms of broader society, I think as you look to create your products and services, educating customers on a similar nature, or maybe there's a way to provide resources to your paying customers to educate general society on the impacts of life and health and climate and some of the things we've been talking about today. But, you know, again, I'll pass it, maybe Harry or Carolyn, anything to add?
We are seeing that the P&C sector is finding different routes to engage with their audiences, especially around kind of rewarding certain behaviors. So as an example, we are seeing some insurers provide incentivization for improvements to home related to flooding, improvements to home in relation to certain security components. And it might be that we find a way in life and health to encourage the same sets of behaviors. I know in the UK, one of the kind of health encouragement plans that was done by one of the insurers was to provide a monetary award for meeting certain targets. So I've not observed kind of climate change specific targets being set for a wider audience in the life and health sector, but I also think that we haven't kind of really thought about that and what that might look like. So potentially now is the time to begin thinking about what those incentives for the insureds might be, and how we begin to implement those across the sector.
Yeah, and I think if I may add on the life and health insurance side, in the Canadian front, the Canadian Institute of Actuaries, we have last year we have prepared a member survey on the climate issues, and this year we're preparing a second survey. So from the previous survey results, it certainly showed that the awareness is there. There's still room for improvement. On the international front, I know that the International Actuarial Association also have a few initiatives regarding the change and the life and health insurance. There's some scenario guidance initiatives that are ongoing, and so those will certainly continue to raise awareness in the global actuarial community.
Thank you. I have another question now from an attendee who asks, do we know why Canada is warming so much more than other countries with larger populations and industrial organizations?
Yeah, it's a good question. I'm trying to recall the exact scientific information. I might be at a bit of a loss to answer that right now. I might have to dig up that study again, but
yeah, one of the reasons for Canada is as the permafrost layers begin to thaw, there's a kind of significant greenhouse gas emission associated with that. So it is kind of seen that there is potentially some link between, the overall heating and that then accelerating the release of gas from permafrost, and that potentially having like a cyclical effect for Canada. But again, there are definitely other potential reasons for it.
Right. One more question is some commentators have suggested that Canada may be one of the few countries to actually net out a benefit from climate change because we have so many inarable lands that will become capable of agricultural yields. Did you agree with that assessment? Can you comment on it?
Well, I think one thing to think about is climate does bring risks and opportunities. So just economically, if they're, whoever's going to win the electric vehicle race will get a lot of product to market. Whoever comes up with the best use of soil technology or taking advantage of additional agricultural space, I think it would be an opportunity. However, we have to be careful that we practice sustainable agriculture in those new areas and don't create long supply chains and heavy fossil fuel based powered equipment and logistics that just contribute to more carbon emissions. So I think, but there could be an economic advantage to having more lands to grow more product and resources. So I think it's risk and opportunity for sure. But Carolyn or Harry, anything else? Okay.
All right, we have another question from an attendee who asks, looking at the international life and health insurance market, are there any specific companies out there that we could look to as a model for how to act on climate?
I'll start. There's a lot of, I mentioned earlier the Intact Research Center out at the University of Waterloo, I believe it is. Just that Blair Feltmate out there is doing lots of studies and producing lots of information for insurance and Intact and such. So I think that's one example of the research that's out there. I know now from other organizations. I think it's I know a gentleman at QBE in Australia, and he was describing, a lot of the insurance companies are really trying to get better at the standardization of data. So they're working on creating standards for climate data so that all of the vendors that approach them will have to meet certain standards to supply the data. You know, I think there's some leading practices that we're starting to see, but it's the research and the data and trying to use it in a consistent, meaningful way. Caroline or Harry, are there other leading organizations or practices you want to comment on?
So I'm aware of some organizations who do think about some of these topics privately, but it wouldn't be something that's in the kind of public domain. So I don't know that there's kind of a leading organization that's kind of calling out what they're doing in the life and health sector at this stage. But we can say that behind the scenes, there are a very large number of firms who are beginning to think about these ideas and think about what it might mean in terms of some of the longer term assumptions, and beginning to open that dialogue inside their organizations. So I've not seen much in the public domain, but am aware in the private domain that there's a fair bit of dialogue and work going on.
Yes, if I may add, it's the same to echo Caroline was saying, that there's still a lot of collaboration that's happening amongst the international life and health insurance. But yeah, like I think a lot of the conversations are still not in the early developing stage, and might not be in the public domain at this point.
Thank you. We have another question from an attendee, and the question is, risk mitigation by P&C clients seems straightforward. Can you expand your thoughts on risk mitigation strategies for clients in the life and health sector?
Yes, so for the life and health sector, some of the new and evolving types of reinsurance that we've seen are kind of segmenting populations and reinsuring certain subsegments off. There have been some work done on, you know, developing new reinsurance structures to mitigate certain tail risks to kind of get those off the books. So there is a kind of evolution in the kind of preciseness of the strategies that are being used, and the kind of the precise exposures and the precise kind of risks that are being mitigated by those strategies. So we are seeing some kind of evolution in the kind of strategies that are being taken in the life sector. Not so much on health. I've not observed that on the health, just to be clear.
All right, well, thank you very much, Carolyn, Joe, and Harry. We have run out of time now, so I'll just close the session by thanking you for your insights and for your participation. I want to thank all the attendees that have joined us on this CAFII webinar, including our regulatory and policymaker authorities across Canada and federally. Thank you all very much for participating. I hope you'll join us for a future CAFII webinar. I do want to remind you that this webinar will be posted on our website. Thank you, and have a great rest of your day.
Thank you. Bye-bye.
Thank you.